It's a marathon, it's not a sprint. It's a long haul. Don't beat yourself up. Sometimes the best decisions you make are not the ones you make yourself. Talent will get you through the door. Character will keep you in the room.
For sure.
Being prepared to pivot, reset, reinvent. That gave me the opportunity and privilege to take some time off the corporate hamster wheel. Another key learning for me, personal and professional, is keep hubris out of it. It's got an uncanny means of coming and biting you on the butt the moment you get ahead of yourself.
But what do you think people get wrong when they're trying to build wealth?
You've got to take the emotion out of it. Combination of hubris and not being able to take the emotion out of it when you need to, that's where they get it wrong.
What does success look like for you?
I think the key measure of
Private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Welcome back to the Grow Your Wealth podcast, where we bring you insightful conversation with industry leaders to help you navigate the world of finance and investments. I'm your host, Travis Miller, and today we have a very special guest, Guy Fergusson, joining us. Guy is a founding partner at Centennial Partners, an independent corporate finance advisory firm based in Sydney. A childhood spent growing up in Central West New South Wales on a family farm provided Guy with the grounded foundation he has taken on his journey to a long career in corporate finance. Guy is currently a non-executive director at Winston Land and the Australian Wildlife Conservancy. Today we'll delve into Guy's extensive experience from his early days at PwC as an undergraduate cadet, straight out of school to the career shifting moment he decided to found Centennial Partners. We'll also explore some of the key lessons he learned along the way to success, such passion, hard work, collective thinking, and avoiding hubris. So without further ado, let's dive into our conversation with Guy. Thanks for coming in.
Pleasure. Great to be here.
How about we start at the beginning? Grew up in the country?
The little boy from Dunedoo, grew up on the land. I often say had the best of all worlds, growing up on the land as a young buck, then went to high school in Sydney, so boarded at the King's School in Parramatta, and then university and quickly into a career in investment banking.
Gotcha. How'd you go at uni? Good marks? Good socialising? What was your angle?
Yeah, it's funny. Probably my first 2 years out of school, and perverse to say this, but were probably the most boring of my life, because a cadetship was a good pathway to getting a great undergrad degree, but you're working through the day. You're doing uni at nights essentially, when most of my mates were at college or on the futures floor and living the life. I wasn't so much, but as I said, not having a place in Sydney, otherwise having a full-time job, funding my way through uni. They then funded my last 2 years for full-time uni, which was pretty cool. It was, the cadetship served a purpose for me.
So that's straight out of high school, the cadetship?
Yeah.
Wow. Yeah. So you're full-time work, full-time study, basically.
Yeah. And just a funny story, because I did some work experience at Coopers and Lybrand, as it was known then, the Maru in Parramatta. When the grad offer came through, I had one at, or the cadet offer came through, I had one at Pricewaterhouse, I had one at Coopers.
Yep.
Coopers was my preference, but it was at the Parramatta office. And I rang the HR person and said, I want to be in the city. I've been at Parramatta for 6 years, want to be amongst it. And they said, well, we've offered them all, but we can get you an interview with the head partner. I walked in, it was in O'Connell Street in the city at the time.
Gotcha.
He said, Guy, just before we start, again, the little country boy, he said, just want to check, is your horse okay? I went, sorry, sir, I'm lost. And he said, well, looking how you dress, riding boots, moleskins, tweed jacket, I assumed you rode in.
He called you
completely threw me. But anyway, lo and behold, got the job. He rang the HR officer halfway through and to get this kid a contract. And
that's great.
That was the start.
Good on you. And then, so obviously we crossed paths in the banking days. So how did it go from there? Just take us through to career steps to effectively where you are today.
Yeah, so I finished my cadetship at Coopers, including then continuing on to my CA, so my chartered accountancy, which I did with when I was at Coopers. I then took 12 months backpacking around the world. Hadn't left Australia, so that was pretty cool.
Yep.
Important time out. Came back, decided that accounting wasn't for me. Got an opportunity, but in the back office, so in the finance control team at UBS at the time. But aspirationally wanted to be in the front office, wanted to be in corporate finance. And that's where UBS were great. They supported me. I saw an angle through doing a master's, and it's not something I publicise often, or certainly not socially, but I did a master's in taxation law at Uni New South. You'll remember back in the day, it was all about the structured products and tax structured products, whether it be hybrids or asset-backed financings and so on. And so I thought I got to build an angle to get to the front side. UBS supported me through that and created an opportunity to join the structured products and hybrids team back in 1998 at UBS, the number one investment bank at the.
Yeah, it's brilliant.
And it's just that, opening the door to get through. That's the hardest piece, is getting that first opening, and then it went from there.
It's amazing in Australia. I actually did a Masters of Tax and Law at Sydney Uni when I was working as well. But amazing Australia, tax is so critical, right? Different legal forms.
Yep.
Different investment structures you can go through. So much different to, say, Asia as an example. So it's actually a pretty cool one to do.
Yeah, it's picking a pathway. Again, having an angle or picking a niche. We'll come to Centennial Partners and being demonstrably good at it. Not that tax law was really a passion, but I sort of had a feeling that corporate finance was, and that was the opening.
Yeah, gotcha. And before we get to Centennial, do you want to take us through Taurus? Because we overlap a little bit in sort of the workplace.
Yep.
Do you want to take us through your experience with non-bank lender Taurus in your previous role? So I guess that was maybe part of the reason where you end up in your current current business. Yeah,
so prior to Centennial Partners, I was 14 years at Grant Samuel, which is one of the longest standing leading independent corporate advisory firms in Australia and New Zealand. Great opportunity I had at Grant Samuel, including the last 4 years as co-CEO. Grant Samuel, over its history and its 35 plus year history, has been quite entrepreneurial, built a range of successful businesses, including Archer Private Equity, one of the first private equity firms, Australian-based. We had been doing a lot of advisory work, particularly Sat Powell and myself, who's now my partner at Centennial Partners in that space, working with the likes of Pepper Money and Eclipse and Scottish Pacific, and said to the team, particularly our chairman, Doug Bartlett, who became the founding chairman at Taurus, we can do this ourselves.
Yeah.
Just got to find the right opportunity set. Sat and Dave Giffen, who also worked with us at Grant Samuel, David's dad was a consultant to the auto industry. He saw a lot of structural change happening in that market. So that's our space in terms of a non-bank financial services business. From blank sheet of paper in 2018, founded that business and built it to a 900 mil plus balance sheet, at which time we exited late last year, or Grant Samuel exit. We'd partnered with Metrics Credit Partners.
Gotcha.
They bought out the Grant Samuel stake late last year.
Gotcha. And what was your role during that process? Where did you fit in? Obviously, you're working full time. Yeah,
so I was, at Grant Samuel as an MD in the Capital Advisory Group, and then became the co-CEO. Really, the role was helping to found Taurus, and then became a board member, the alternate board member for our two board representatives, who were Doug, as I mentioned, the founding chairman, and Rob Jenkins, alongside the Metrics Credit guys.
Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. Yeah, so it was in that advisory, sort of pointing them the right direction type capacity. Yeah,
and then in a governance role, sitting on the board. Yeah,
perfect. And then what are you up to today? The new business?
Yeah, so no, exciting. Sat and I launched Centennial Partners in June. When Grant Samuel exited our stake in Taurus last December, Sat and David both resigned at the time. They were sort of more aligned with Grant Samuel, saw their pathway being a different pathway going forward, and so Sat and I started talking. At that point, I I had resigned from Grant Samuel, left last September.
Yep.
Took a bit of time out, reset, reinvigorate, reinvent yourself. We thought a lot of opportunity in this financial services space, particularly non-banks and private credit, and decided to launch Centennial Partners, which is an independent corporate advisory firm, so very small, Grant Samuel, Gresham, but very specialised at this point.
Gotcha. And what made you, because you obviously co-CEO, you could have stepped into lots of different roles in the more established financial services businesses. What made you make the call not to go back the traditional path and ultimately start your own business with someone you're obviously done a bit of work with in the past?
Yeah, good question. I saw it as a combination of things. I do think retirement's a fallacy. I wasn't going to be retiring. I'm 53, but probably got one more proper shot at it.
Yeah, gotcha.
And so, 10, 15 year horizon, that now was the time if we were going to do it ourselves. That combined with, just serendipity, right? Sat resigning from Taurus, the opportunity that we're seeing, in finance companies, and when we talk about non-bank financial, I know a lot of lingo, but essentially financial product providers, but a non-deposit back from a funding perspective. Yeah. And we've seen exponential growth post-GFC, as we see, we fondly refer to the unwind of the Aussiegopoly, the Aussie majors dominating all things financial products in this country. But even though there's been exponential growth, and certainly iPartners, you're spending a lot of time in the space, very specialised in the space, you'll be seeing this the same. It's tip of the iceberg.
Yeah, for sure.
And it's very specialised. Sat and I have worked together for 15 years now. We've built our own. He was co-founding CEO.
Yep.
Have put ourselves in our clients' shoes. We see a lot of opportunity in that space, and we love the space.
Yeah, I mean, that's it. The overlap with iPartners as investors and providing investors investment opportunities, the asset-backed nature of non-bank lenders are interesting to fund. And you hit a good point before around non-deposit taking institutions. The fact that most of them aren't taking deposits, you got to be creative about your funding model, right? And that's when things like securitization and different sort of elements come into it. And that's where I think it's interesting. The sector itself's growing. It's not deposit funded. And that's where the private credit market probably gets involved, and just different solutions to allow them to fund whatever the asset class that they're, providing a service to.
Yeah, and I think, you think about it as both sides of the balance sheet from, as you say, non-deposit funding. So you need to be a bit innovative about opening up new markets. And what we are seeing is an explosion in opportunity for private credit in that space. And yes, it's got its own nuances and complexities, but in a lot of respects, and I'm generalising, but we think in terms of relative returns for the risk in the asset-backed space, maybe because it is a bit unknown, you're actually getting a premium for the space. So we actually love it in terms of an investment opportunity as well, as we're intermediating between borrowers, being our finance companies, and lenders in all their forms, combination of banks, institutions, including private credit. A great opportunity.
Yeah, I totally agree. And I was actually writing an article earlier in the week, and the two things that I had was sort of that illiquidity premium, but I think something you touched on is complexity premium. As an investor, it's not necessarily a higher risk for the given return, but it is more complex. So it takes more time to analyse it, understand it. There's more effort, more work involved. And that's why it's interesting from an investor perspective.
Yeah, no, you're right. I mean, maybe it's right that there's more work involved, but the nature of asset-backed financing, securitization, it's all about granular, predictable, long-term cash flows.
Yep.
You've actually got far better asset backing, cash flow backing than an industrial style company lend.
For sure.
And yes, that sometimes lends itself to needing to do more work, only because it lends itself to it, because it is more granular. So in a credit sense, I often think it's more straightforward.
Yeah. Well, that's That's what we say as well. But yeah, I think it's definitely an interesting asset class and one we're both very focused on. A couple of things just slightly off work. During your career path, can you tell us a couple of people that have influenced you and why, I suppose? It's another step in.
Yeah, there's probably three people. The first one is my dad, who, good country boy, ran the family farm. That was his career. Very high value set, hardworking and passionate about what he did. So I guess took that away from him. But also directing me in my career, perversely, not in the way you'd think about, but directing me almost where not to go. I remember a story, if you bear with me a little bit. I was, year 9, so impressionable age, 15 or something. Had a couple of mates home, and been in the cattle yards all day. It was 35-degree heat, stinking hot, dirty, dusty. From dawn to dusk. Sitting around the dinner table that night, Mum's trying to make conversation. So, how was the day, boys? We go, we're all energised. We contributed a lot. And there's Dad just shaking his head, and he was pretty straightforward, my old man. He said, "You know what? I'm just surrounded by freaking incompetence. Sorry for the language." I think I knew at that point that maybe the land wasn't for me. I loved being on the land, but was I good at it? Cut out for it? Probably not. So it was a hard lesson. But anyway, so that was, Dad was the first one. Second one was, and around the same time, my cousin, who was on the farm with us, a fair bit older than me, but her husband was in structured finance. So he was at Babcock's back in the day. So you talk about tax structuring, very early days. And so I guess he piqued my interest and has been a bit of a mentor for me throughout as I've pivoted.
Gotcha.
Got me, opened my eyes to a cadetship opportunity at Cooper's, and then from there, investment banking, how it worked. He'd spent some time at Grand Samuel. So when I'd left Deutsche, not by my own choice, but left Deutsche, the opening came up at Grand Samuel, taught me through that. So he was the second one. And then the third one, and you'll probably remember Jeff Tarrant
for sure.
at Deutsche.
Yep.
Talk about hybrids and structured products, was one of the leading, fathers of hybrids in Australia. But talk about sometimes good guys win. Not only was he super smart, commercially astute, but he cared about the people around him, brought the team on the journey, and no surprises, it's played out for him. Not only was he a very successful investment banker, but subsequent to that, he's even been more successful. So he's built his own software company targeted on the construction industry. Look it up, PayApps, great story. Had brought IFM as a co-investor. They've just exited really recently for some pretty serious dollars. And that, amongst others, he's sat on various board seats. But key takeaway, you can have all the attributes to be successful, but the good guy, which not always commonplace, particularly in investment banking land.
Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now back to the episode. So there's interesting people there. I remember Deutsche in that day were dominant too in that hybrid space.
Yeah, we had a great team. I mean, I'd got poached from UBS to go to Deutsche. It was a big call because UBS was the number one investment bank in the market. But it was principally because of Jeff. They were bringing him across from Citi at the same time. We were building a team around it together with Mike Roach, one of the smartest guys I've ever worked with. Yeah. Built a team off the back of Michael Omachia's leadership.
It was an awesome time to be at Deutsche.
That was a fun time at Deutsche.
You and me overlapped quite a bit in the years we were at Deutsche. Very good. And now business. What drives you in business? What gets you out of bed in the morning?
I mean, it might sound a bit cliched or naff. I mean, the money's good. I've been fortunate. But honestly, the emotional reward, particularly in the independent corporate advisor role, in working with clients that trust you implicitly, respect you for your advice, and partnering with them to achieve outcomes that they couldn't otherwise achieve on their own or with other advisors.
Yeah.
Sat and I, as I said, worked together for 15 years. We've been fortunate to create a range of market firsts off the back of challenging or esoteric situations.
Yeah.
That's really rewarding.
There is something rewarding around that project-based transactions, right? You've got to go through the advice, you've got to go through the legals, you've got to take all the steps. Once you close that trade, it's not like buying or selling an equity. It's actually a project. And the reward of getting to that end game and all counterparties are relatively happy, that's when you've known you've done something good.
Yeah, you've been in the trenches together, right? And it's ups and downs. These are long projects, 6+ months.
For sure.
Typically, often you don't have a great line of sight as to the outcome, but it's just having that belief as a team, both out the Centennial Partners team or the same as it was at Grant Samuel and the clients team, and bringing financiers like, institutions like an I Partners or otherwise on the journey is, that's a lot of fun.
Gotcha. Very good. And now I want to go back to, again, I see you've come from large organisations to your current business. What advice would you give to other people looking to make that leap? Because it's a big leap for a lot of people to, register your own company, start your own business and wake up one day and go, how am I going to pay myself?
Yeah, it is a big leap. A big part of it's mindset, and that's why I love Gem White. They back themselves, right? And maybe they've got a protective net there. Parents that have money that we didn't. But either way, that's a mindset. So backing yourself, you've got to find your niche. Find your opportunity, and that's the finance company and private credit space for us. And the good thing in corporate advisors, there's very few barriers to entry, right?
That's true.
If you've got some clients that are loyal, and then finding the right partners, like in personal and professional, the same, the right value set, and then harnessing the team, the power of collective think and diverse thinking.
It's key about advisory, actually. It's a low cost base to enter. It's not like your old man who you don't have to buy land and tractors. You just got to turn up and find a client that trusts you.
Capital light business is the beauty of it. And in our space we've got a diversity because it's multifaceted in terms of the advice. It's not just M&A or strategic advice, which can be higher risk because you don't know if you're going to get a deal completed. Core to finance companies is the funding piece, and so it's inextricably linked. And when we're going through a financing, the debt or equity, the financing sort of more or less has to get done one way or another. So you're going to get paid within reason.
It's sort of the coming from my side, we obviously more the investor. We're providing the capital, and one of our philosophies, it has to get done. Because there's always a client on the back of it that needs, say, $10 million to run their business and continue on. And if we raise $8 million, that's of no use to them. They need 10. And so one of our philosophies has been, if we say we're going to do it, make sure you get it. Because I know there's someone on the other side of it that needs that money to grow their business. So it's critical about our industry. You do need to deliver.
But that mindset in itself, that's why it's such an exciting time in this market because whether it be, capital light business starting, Centennial Partners, corporate advisory business, but if you're starting like Taurus, your own finance company, even 10 years ago, that was pretty hard.
True.
You got the Metrics Credit Partners, the I Partners of the world, and that's just to name two of many, particularly what you're doing at your end. Funding early stage businesses. So if you've got a good idea and a good product you want to get to market, there's a range of them out there. You look at, the Sacasas and the mid-key, solving a niche situation, back yourself.
Yeah, totally agree. And what's worked for you in business? One or two things you think you got right? Even personal life, a couple of things you think you got right? Whether it be in your professional life or building wealth, the most important decision in life is the right life partner. And I've been very, very fortunate in that regard. So, got the most important decision right. Is ability to dust yourself off and start again. It's not all smooth sailing. It certainly hasn't been for me. I got fired at the height of the GFC from Deutsche Bank. I'd enjoyed my 7 years. Was it for me longer term? But would I have made the decision? Sometimes the best decisions you make are not the ones you make yourself. True.
And also, I think another key learning for me, again, personal and professional, is keep hubris out of it. It's got an uncanny means of coming and biting you on the butt the moment you get ahead of yourself.
That's so true, isn't it?
I just time and time again.
Get you when you're not watching.
If talking to a young guy going back to the farm as you're heading out, keep the hubris out of it.
The thing about on the farm, something's always breaks.
Yeah.
You got everything ready, you're about to mow the lawn, jump in the tractor, tyre's flat, won't start, the belt's broken.
Yeah, least in corporate advisory, right? No one's getting hurt or worse, dying. But complacency still kills deals. But on the farm, you're right. Get complacent and real accidents happen. And I saw it firsthand. I mean, my uncle, who was in partnership with my brother, and he was fastidious with everything he did. But one day it was just a long day. We'd been harvesting, 3 days straight. You used to run the harvesters 24 hours a day and lost 3 fingers in a conveyor belt.
Yeah, it's not good. Now, well, sort of this overlapped. What about bumps in the road? Obviously, you mentioned GFC, Deutsche, but that sounded like, well, you sort of dusted yourself off and career kind of possibly took off from there. Any other bumps in the road?
Even leaving Grant Samuel, I mean, it wasn't almost, I was co-CEO, but the co-CEO, there was a view that hadn't been working. We'd been in discussions with an overseas party. I'd come back for some long service leave, probably was due for a reset. Chairman sat me down and said, how about an alternate role, executive deputy chairman role? Maybe this is an opportunity to reset again. And it's just being prepared to pivot, reset, reinvent, and most importantly, reinvigorate. That gave me the opportunity and, a real privilege to take some time off the corporate hamster wheel.
Yeah, for sure.
And you see it all too often. We don't do it. That need to reset and reinvigorate, take some time out. Our kids are a bit older now. Gave Georgie and I some time to travel, some time at our place in New Zealand. Just so important.
Yeah. We caught up probably a couple of months ago and you're just getting your business moving. It's interesting though, if you create good networks, do a good job during your career working for large financial institutions, how quickly you can build up your pipeline when you step out by yourself. Because there's opportunities there if you're prepared to go knock on the door. And when we spoke, it sounded like even early days you had plenty of business, potential business.
Yeah, but we didn't know if that was going to come.
Sure.
But, you talk about pivotal moments, I guess doing the Masters in Tax Law and the door opening to investment banking, perversely losing the job at Deutsche and starting at Grant Samuel, opening my eyes to the power of the independent advisory world. The third, key turning point was a call. We actually hadn't put our shingle up, and Patrick Elliott, who's senior partner at Next Capital, one of Australia's leading mid-market private equity firms, very well regarded, called me back in April and said, I hear on the grapevine you and Sad are looking at getting the band back together. We've got a couple of complex or esoteric situations. We know you guys love that. Are you available? We're available.
Yeah, it's good, isn't it?
Yeah, those, to the point. We didn't know at that point, but having loyal customers that stand by you, that I guess that was the moment we went, maybe this is an opportunity.
The key, I mean, that says to me the key as you travel through your career, you don't know where it's going to end up. And you want to be sort of nice and do the right thing as you flow through, because you might get that first phone call when you start your own business. It sounds like you got the call. Yeah,
we were lucky and we're on our way. That was, we had the 2 mandates by the time we did put the shingle up in mid-June. 2 very exciting transactions with, great companies, so Compare Club and Silver Chef, great finance companies to the point of the opportunity in the space. Yes, it's niche, it's specialised, and it hasn't necessarily been done before what we're trying to do, but going back to first principles, it'll get done.
Yeah, I mean that's in both of those names. They're the types of names we look for from an investing perspective, because we get the asset-backed nature of those lenders. Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening. If you look back at your younger self 20 years ago, what tips would you give yourself?
It's a marathon. It's not a sprint.
It's a good one.
Yeah, I can see. The young people today, and all credit to them, and working hard and building out CVs like we never had, in terms of all range of elements. But it's a long haul. Don't beat yourself up when you don't get an outterm in a short term context that you're looking for. And then. And I think, what was I going to say? The second point on...
The first one you mentioned is interesting, right? That resilience. You'll have bumps in the road. You kind of got to just keep going.
Yeah, and I think, that was the other point I was thinking of. And we see a lot of talented young people out there, very well educated, high IQ, probably developed EQ than a lot of we had at that same age. Talent will get you through the door. Yeah. Character will keep you in the room.
For sure. Yeah, for sure. I know as the recent hiring and the way I look at things, I don't often read CVs anymore.
No.
I'm kind of like you just sit in front of someone and just try and understand where they're coming from, what their background is, just a chat. Just seems to give you a lot more information than a piece of paper and what marks they got at uni.
Yeah, that character test, particularly... in our context, so it's probably the same in an iPartners context, but in our context, I mean, we don't have anything tangible. We don't have capital, don't have any physical assets. All we've got is our values and principles and and hopefully some expertise.
For sure.
So that character test is paramount.
Gotcha. Last few questions get a little bit philosophical, but your definition of success and then what legacy are you living and leading? Start with the success. What does success look like for you?
I think the key measure of success, and it comes back to the character test, is your partner, your children and friends want to spend time with you.
It's not bad.
Pretty simple. And not getting too carried away. The world of capitalism, we see a lot of money flying around. Knowing when enough's enough.
Yeah, I gotcha. Will you ever go back to the farm? Or go back to a farm?
My brother's on the farm, so
Gotcha.
We still have it in the family, which is nice. My mum's in Mudgee. We spend lots of time out there. I mean, not that it's a farm. Georgie and I have a little plot on the South Island of New Zealand. That's our escape back to the...
That's brilliant.
To the country, even though it's, nothing like Moreton Bay, which was the farm at Dunedoo.
Yeah, gotcha. That's pretty cool. Right, a few quick fire questions. First, I probably can guess this one, but your first job and how old were you?
Yeah, rouseabout on the farm.
How old were you? When you
we really started when Dad cut me a deal when I got my first motorbike at 7. Yeah, you can play with that, but you got to help mustering the cattle and the sheep.
Yeah, so you're working your whole childhood basically.
Yeah.
Okay, we talked about this earlier, piece of advice for younger self, but what motivates you most as a person?
Yeah, again, cliche, but being the person that your partner, your kids, and your friends want to spend time with.
Gotcha. Tips for driving long-term wealth.
Oh, and I'll the risk of repeating what I said before, I still think the first and foremost question is getting the life partner question right. Because it's very expensive when you get that wrong. Is getting good advice, and fortunately there is great independent financial advice that's available. Building a diversified portfolio, and we're fortunate again the emergence of new products, including unlisted products, and not just talking about infrastructure and real estate, private equity, but private credit. So you've got a properly diversified portfolio is fundamental, and then power of compound interest.
For sure. The old compound interest always pops up.
Yep.
The answer to this one could be the complete opposite. But what do you think people get wrong when they're trying to build wealth?
You got to take the emotion out of it, right? And that's why I think, and it's funny, I've worked with a lot of investment bankers, notoriously bag investors as a generalisation.
Yeah, for sure.
And maybe because a combination of hubris and not being able to take the emotion out of it when you need to, whether that's hitting the stop loss or not. And that's where you got to put it in an expert's hands, independent. You got to trust them implicitly. But that's where they get it wrong.
It's interesting that point that there's a lot of investment bankers invest with iPartners, and I find them they're very conservative investors.
Yeah.
Which is interesting given their career path. When they invest personally, they tend to invest small amounts and not enjoy risk. And you'd think they naturally would. And then I'll speak to some people that are whatever scaffolders and tradies, and they'll be taking genuine risk. It's sort of
it's hard to rationalise that. I've seen that lots as well, so I'd agree. How do you rationalise that?
Anyway, everyone's different. We could be generalising anyway. So when you're not working, you've mentioned family, you've mentioned New Zealand. Obviously, you got the farm, but how do you like to spend your time when you're not working?
Combination of things. Enjoyed time out with friends and family. One thing that Georgie and I have always done since our first was born, we said we've got to carve time out for ourselves. So, Ollie's now just about 24. We've been doing a date night every week for 24 years now. So that's the most important time. And, spend a lot of time as a desk jockey. It's getting away from the desk and doing the sport, whether it be time at the gym, golf course,
that's great.
Tennis courts, skiing, mountain biking when we're in New Zealand, trekking. That's our escape.
Sounds like you've got good balance.
I always say, I touched on it before, I think retirement's isn't reality. We all need a purpose, but the real nirvana is finding balance. And investment banking, working in finance, it's not many people find that balance. I'm still looking for it. I mean, I'm loving it because it's a new adventure. We're energized, we're enthusiastic. Early days, back on the tools, working as hard as I have in recent memory, which is fun, but that's not nirvana.
Yeah. The balance for a lot of people, often it comes with burnout. They burn out and they go, what just happened? And they've got to reset. But it sounds like for you got out at the right time. You've had your break and you're ready to kick on to this new business, which sounds like it's starting off really well.
Yeah, no, we've been fortunate again, particularly the Next Capital guys underpinning our start. We've a couple other mandates, one in particular, which was a referral again from a completely different sector, still in the broader finance sector, insurance. But so been fortunate and having fun under our own banner. So it's early days, but we'll see how we go.
Good on you. Now, if you're interested in connecting with Guy, you can connect with him on LinkedIn. We'll include the link in the show notes. But thanks a lot for coming on. Really appreciate it.
Pleasure. Thanks, Travis.
Thank you.
Enjoyed it.
Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.